Folks, Tether has been downgraded, and the ability for it to keep its peg, according to S&P Global Ratings, has moved to weak from fair. USDC, on the other hand, is labeled as strong, so very, very much divergent. Now, you might think Tether's going to absolutely collapse now. Not exactly. They still actually have the reserves after the audit by S&P Global Ratings, but their stuff in the reserves aren't what S&P Global Ratings likes because they have too much Bitcoin. And you're thinking, oh my gosh, like they have 100% Bitcoin in the reserves. That can go down 50%. No, 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 no. They only have 5.6% Bitcoin in their reserves, which isn't actually much, which means 94.4% of their reserves is not Bitcoin. So Tether's ability to maintain its dollar peg was downgraded by S&P Global Ratings Agency. I'm looking at DL News, but this has been reported by many, many news channels, citing a dangerous shift towards riskier assets. Obviously, I think Tether wants to generate income, and that's why they've done so. But this has actually resulted in a downgrade. I think S&P has downgraded them way too much because they have the same label as TrueUSD, which has lost access to nearly all its reserves. Tether has full access to all its reserves, and only 5.6% of the USDT is backed by Bitcoin. Now, some of us in the crypto industry might actually think that's not such a big deal because, that's still over 94.4% that's not backed by Bitcoin. But regulators really, really don't like that. They like straight dollar backing in terms of treasuries. Tether still has a giant pool of US treasuries, but they don't want the 5.6%. In fact, the over-collateralization margin is 3.9%, so they're 1.7% above that. Now, does this make me nervous about Tether? No. You can make your own judgments, especially if you're familiar with how these ratings work, but it does not make me nervous about Tether because it's only 5.6%. Now, it was 56% Bitcoin, I would definitely have a huge problem. Because, if Bitcoin drops 50%, well, there goes like 20, 30% of your reserves. If it's 5.6%, if Bitcoin drops 50%, that's only 2.8% of your reserves. That means you're still over like 97% backed. So it doesn't actually worry me. Now, the thing is they say high risk assets jump to 24% of reserves from 17% a year ago. And they do actually include Bitcoin as a high risk asset. So high-risk assets, including Bitcoin, gold, secure loans, and corporate bonds, now account for 24% of the reserves. So what they consider high risk, a lot of us would not consider high risk. Bitcoin, okay, sure. Although, I think a lot of us in crypto wouldn't consider that high risk, but in the grand scheme of things, it's high risk. Gold is pretty good. I wouldn't consider that an extremely high risk. Secured loans, I don't really think so either. And corporate bonds, depends what corporate bonds are. If they're AAA bonds, I wouldn't consider them high-risk bonds. I think for the S&P, they want to see U.S. bonds and U.S. treasuries be 100%. But Tether has about 24%. That's a combination of Bitcoin, gold, secure loans, and corporate bonds, with the rest being U.S. treasury or U.S. bonds. So it's essentially 76% cash or cash equivalents, and then 24% Bitcoin, gold, secure loans, and corporate bonds. Now, that does not seem super unsafe to me, but these ratings are very, very strict. So you can make your own judgments by that. And of course, one of the big problems is that Bitcoin has crashed by 20%. But remember, that's only 5.6% of the USDT in circulation. Maybe they didn't have it over collateralized enough. But Tether right now still doesn't really have any real problem accessing the reserve. And if people actually want to trade out their USDT, they can still do so. So Tether maintains around 181 billion backing, about 174 billion of USDT in circulation. So they're over 7 billion backed, which means Bitcoin can basically drop to zero almost, and they can still be fully backed on their USDT. So I think the risk factor is still kind of small, but obviously S&P 500 Global Ratings does not actually agree with me because they have different standards. So most reserves sit in short-term U.S. Treasury bills at 64% and Treasury-backed repos at 10%. But it's that remaining 24% high-risk assets that worries the S&P. So the thing is, they've audited Tether. So like 64% of USDT is backed by short-term US Treasury bills, about as close to cash you can get. And 10% is Treasury-backed repos. That's pretty close to cash as well. It's the other 24% that actually is a combination of what I think most of us would consider pretty safe assets, but with what the S&P actually considers fairly risky assets that's subject to fluctuation that they're uncomfortable about. So they say these assets are subject to credit, market, interest rate, foreign exchange risks with limited disclosure. So if you're not basically in U.S. Treasury-backed assets, obviously U.S. Treasury-backed is subject to inflation, but inflation comes in like very even intervals, and it's really not that big. These other ones are a little bit more risky. Moreover, the opacity extends beyond asset types. Tether provides limited information on the creditworthiness of its custodians, counterparties, or bank account providers, despite promises by management to help combat the use of USDT in illicit activities. They have actually been working with the FBI. I think like the lack of transparency, obviously, really factors into the fact that they got a really bad rating as well. So that's kind of like where we are right now. So, but the S&P considers El Salvador's framework less robust than standards for the U.S. But like Tether moved to El Salvador from the British Virgin Islands in 2025, securing a digital asset service provider fee. But of course, because they have a digital asset provider fee license in El Salvador, does not convince U.S. authorities. They think El Salvador's framework is quite a bit looser and less robust than the standards in the U.S. or Europe. Obviously, Tether moved to such a place so they can actually acquire such a license because they wouldn't be able to get one in the U.S. or Europe. And of course, El Salvador is going to have a different rating because the country actually has Bitcoin in its bonds. Despite the downgrade, Tether remains largely profitable. The company generated $10 billion in profits, way more than USDC, over the first 3 quarters of 2025. And already in 2024, it bested some of Wall Street's best performing funds with $13 billion profit last year. So the problem with that right there is that Tether's asking for a valuation of $500 billion, which is 50x profits, which I think is way too much. Now, like I said, despite the S&P downgrade, I don't actually think Tether's risky, and I definitely don't think they're risky after looking at what their treasuries actually are after the S&P is audited. And essentially, 64% backed treasuries, U.S. treasuries, 10% treasury-backed repos, 24% consisting of gold, Bitcoin, secured loans, and corporate bonds. Now, I'm guessing those corporate bonds are AAA, because if they're not AAA, that's another matter altogether. But if you have AAA loan bonds, that has a fairly low risk of default. And the fact that 3/4 of your backing is basically treasury bonds, I think that gives me more confidence than I had before, despite that coming down. So no, I do not think Tether is a black swan event, and I would be very surprised if it really had any financial stability trouble. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you, and have a nice day.